I'm going to record these lectures and I'm going to post them to the class so that not to encourage you not to come to class, because I do want you to absolutely come to class, but what I will do is I will post them in Canvas. Let me go log into my De-Anza Canvas from here. Okay, you should probably saw this on your desktop. Okay, and I'm going to go ahead and put it in student view. Okay, and I'll put the office hour information up here as well. We're going through the syllabus now, so you may want to download that right now if you haven't, so that you can kind of see the syllabus, which is right here. I'll get into this when we deal with the textbook here in a minute. And then you'll see the chapters. Okay, and what I will do is I will post the lecture up here. Now, sometimes students will say, where's the lecture? You know, and I do admittedly get a couple of days behind on that sometimes because I have to go through a process. I have to download it from Zoom, then I have to upload it to my page where I can give you the link and so forth. So be a little bit patient, but I'll try to get them up there within a couple of days. And even though this is a synchronous class, I like to put the recordings up because sometimes maybe you'll be reviewing some of the slides or something. You'll say, what was this exactly? I want to make sure I understand this. And you can go and fast forward. You don't have to watch the whole lecture. You can fast forward to the part of the lecture that discussed that particular slide if you have some questions. Of course, you can always reach out to me. And I'll do that chapter by chapter as we go along. Okay, so right now, for some reason, I'm only seeing 3 chapters. I guess I didn't unhide those other ones, but I will as we go along. And you'll see why I think I went ahead and did the 3 chapters, because that's going to be our first midterm. We'll cover those first 3 chapters. Okay, so I will go ahead and put that information up. But my background, I am a CPA in the state of California, certified public accountant. In order to become a CPA, what you need to do is you need to complete your education with a bachelor's degree. Okay, so you have to have a bachelor's degree, and that education has to contain no less than 120 semester units. You convert quarter units to semester units by taking the quarter units and multiplying them by 2/3. Okay, so it's 240 quarter units. It's 100, is it 240? I forget the conversion, but for quarter, but it's 120 semester units. You have to complete that with your bachelor's degree. That allows you to sit for the CPA exam. CPA exam is a 4-part exam of which the financial accounting reporting is like this class on steroids 10 times over. Okay, so as you build up towards that bachelor's in accounting, you'll be prepared to sit for the CPA exam, although almost everybody takes a review course. So you have that financial section, you have a regulations section, which is tax. You have a section that deals with auditing. Here at De-Anza, we have Accounting 58, which is the auditing class that I'm teaching this term as well. And then you have the specialized section, a discipline section, where you can choose a particular area of accounting that you want to specialize in, and they make you complete a test on that. So those are the 4 parts. You have to complete all 4 of those with a grade of 75% or better. Okay, once you pass that exam, then there's an expectation, and most students actually do this next part before they pass the exam. There's an expectation that you will acquire an additional 30 units of education, 30 semester units. So you go from 120 to 150. So ultimately, you have to have 150 units of education, pass those 4 parts of the CPA exam, and then you have to pass a 50-question ethics exam. It's multiple choice questions. It's a take-home exam, but you have to finish that exam. And then the hard part, you have to acquire 1 year of experience working, doing certain accounting type procedures. You spend that 1 year working under the supervision of a CPA, then they will issue the license. So it's a lot to become a CPA. So I acquired that experience piece by working for the federal government, an agency called the Government Accountability Office. GAO is the auditing investigative arm of Congress, and I was on a variety of financial statement audits and then program audits. And I spent about 26 years doing that. Okay, and then about I guess it was about 1995 or so, I started teaching the CPA exam. So I've been helping folks pass the CPA exam for nearly 30 years. So while I was still working for the GAO, I was also teaching with an organization called Becker Professional Education, helping students to pass the CPA exam. So I did that for a number of years, working for the government, teaching folks how to pass the CPA exam. And then in 2014, about 9 years ago or so, I decided to retire from the federal government and pursue teaching full time. So I started teaching at San Francisco State, San Jose State, UC Berkeley, Stanford, and Golden Gate University. And I did that for a number of years. So the teaching as a second career thing kind of worked out because I started teaching at many different schools. I retired from teaching at state institutions last year, at the end of last year. So, the summer term for 2022 is my last year teaching for San Francisco, San Jose State. And I continue to teach at Golden Gate University and at Stanford. At Stanford, the class that I teach is for non-accountants. It's a class very, very similar to this one, where I teach the introductory of financial and managerial accounting. We don't cover managerial in this class, but that class, they combine the two. And I teach that in the Department of Management and Science Engineering. And then I teach at Golden Gate University, the CPA Applied program. I'm the primary instructor and director of that program. And in that program, what we do is we help individuals pass the CPA exam by having 4 classes that line up with the 4 parts of the exam. And it's kind of a good deal because you can complete your bachelor's with those units. You get your bachelor's, you can sit for parts of the exam while you're taking those classes. And then those same 12 units will then be available to be used to start your master's. So it's a fairly good program because someone can graduate from De Anza, let's say, or finish, some work at the community college. I think that Golden Gate allows you to transfer something like 93 units. So then you're 30 units away from completing your bachelor's, and then you could go to Golden Gate and take your 93 units and then take that program that I'm talking about. 12 of the 30 more units or so you would need to graduate will help you pass the CPA exam, and those same 12 units then get banked towards the master's. So I think it's a pretty good program, and I can put up information about that at some point in time if you're interested in learning more about that program. So that's sort of where I'm coming from. I believe that I can give you both worlds. I've got a lot of experience in teaching, obviously, but I spent many years actually practicing. So hopefully I've got some teaching chops that will be useful, but I can also give you some practical examples of some of this stuff as well. Okay. Again, I'll put up the information for the office hour. I'm going to come back to the textbook. Okay. So probably what you're most interested in on the syllabus here is, well, how am I going to be graded, right? We're going to have 3 exams. We will have 2 midterms and a final. Now, the term final here is a little bit glorified in that I don't require a cumulative final. So the final will just have the chapters that come from the material that's covered after that second midterm. And I'll show you that specifics here in a couple seconds. Each one is worth 100 points. And so since we have a total of 500 points, that will constitute, 20%, 60% or 300 points on your exam, 100 points for each exam. We'll have a guest speaker write-up. Stay tuned for that. I like to bring in somebody that his name is Danny Wallace. He was a partner at a Big Four accounting firm. So in the United States, there are 4 accounting firms. In fact, they do work internationally. I would say in the United States, but there are 4 accounting firms pretty much internationally that look at financial reports and give something called an opinion as to whether or not they believe those financial statements are fairly stated. And one of those is PricewaterhouseCoopers, PwC. You'll often see them referred to. And PwC basically has those, helps those companies go public in many cases. So I think it's worthwhile to have Danny come in, because some of you may be thinking, well, where does this all go? How does this all translate as, say, a company wanting to be listed as a company that you can buy stock in, et cetera? So Danny will be somebody that you'll want to watch his video when I finally get that available. And I will also post that up and then ask you to ask certain questions. Okay, good. Guys, don't chat any questions. If you have questions, just unmute and ask them, because it just becomes a little bit tough for me to go ahead and follow the chat as I'm also speaking. So if you have a question, just go ahead and chat those in. I mean, unmute and ask those. The question that was chatted, though, was, do I have to come to class because I have a conflict on Tuesdays and Thursdays? My understanding is this was listed as a synchronous class, meaning that there's an expectation that you will be in class. Now, if I'm wrong on that, I'm pretty new, and I can ask that question again. But when they brought me on, they said this is supposed to be a synchronous class. So I don't think it's fair to expect folks to be here, and then, some people are doing something different, watching the recordings and not coming to class. And I'm certainly not much of the desire to sit here and talk into the camera by myself. So, my understanding was that this was supposed to be synchronous, that you were supposed to be here on Tuesdays and Thursdays. Thus, I'll be expecting you to be here. Okay. Now, look, we all have a one-off where, something happens, the dog gets sick, the cat gets sick, the kid gets sick, the dog runs away, the kids run away, whatever. I don't know, things happen. I'm not going to sit here and, hammer you, if you miss a class or two. But if I start to see that someone's never coming, there's an expectation that you would be here. That's my understanding at this point in time. If I learn differently, I'll let you know. Okay, good. So 3 exams, and then guest speaker write-ups. Okay, and that will be Danny Wallace. I'll show you, I'll tell you now, it's a 3-page paper that we ask you to do, that I ask you to do. It's 3 pages, double spaced. There are certain questions that I want you to answer based on his presentation. And I'll be posting that up as I post up the video of his lecture. Excuse me. So you'll watch the lecture that he's going to have. That will be recorded. That won't be a synchronous thing. I'll record that lecture. You watch that lecture, and then you answer those rubric questions, and you have to write that up 3 pages. Okay, double spaced. I am not terribly critical on how I grade that, but I do expect you to, go ahead and, turn that in, of course. Okay. Okay. So homework, and I'll get back to the discussion of the textbook and the homework that's set up there in a couple of seconds. I would say, guys, that if you are conscientious, you turn that paper in on time, you write the 3 pages, you answer the questions that I'm asking you there in a thoughtful manner, you try the homework. I'm not going to sit there and pour over the homework and say, did you miss this? Did you get this right? But I will expect that you go ahead and take a look at that homework. These points are almost free points, these 200 points right here. Okay. Where you're really going to have to perform is on these exams. Okay, you're going to have to do a good job on these exams. I am giving you 30 multiple choice questions that I expect you to work on the exam. Okay, there's 30 multiple choice questions you'll have to work. And as you know, for multiple choice questions, they're either right or they're wrong. Now, sometimes students will look at a multiple choice question and they'll say, well, I was confused because it looked to me like B could have been correct also, even though you're saying, John, the answer was A. Well, if you give me a good argument, okay, I see your point, you convince me, it's kind of like going to court. You convince me that, yeah, maybe B should have been the right answer, then I'll get the points for that. So by saying it's either right or wrong, doesn't mean that you can't look at a question and, you know, rationally look at that, and a reasonable person would agree that, yeah, B could have been the right answer. Or maybe I make a mistake and I click in the system that B is the right answer when A was the right answer. You know, I'll give you the points for some mistake or some issue like that. But you really need to perform on those 30 multiple choice questions. 3 exams, 2 midterms, and a final, 100 points each. What's that? 3.33 points per question or something like that. The final is not cumulative. Okay. I will also offer extra credit opportunity, and I offer extra credit as long as you have done all the assignments. Okay, so extra credit is not a way of making up points for assignments you blew off. Okay, but if you've attempted everything and you say, you know, John, I'm sitting down here and I really would like to get, you know, an A instead of an A minus. What's the extra credit opportunity to get me those extra 10 points that will throw me over? I'm close enough. I'll be able to get an A if I just do that extra credit. That I will do. But, you know, if you're sitting down here and you're like, well, I'm at a D plus because I didn't turn in, you know, one of the assignments, but with 10 more points, I'll get, you know, a C minus or something like that. That I won't do. Okay. So you have to try everything in order to do that. Again, the question asked, do I have to come to class? Well, you need to take the exam. We're going to meet online. I'm going to have you take the test during the scheduled class time. Okay. And so obviously you would need to be available to take the test during that time frame, unless I'm wrong. If the answer is we don't have to come to class, then I guess this will turn into a asynchronous class. But my understanding was that this was supposed to be a synchronous class. So you need to take the exam on the day of the exam. There are no makeups. No makeups. So you need to be here and you need to be available to take the exams on the day that the exams are given. Do your own work. Don't cheat. I have had experience of students trying to cheat and I always catch them. So don't cheat. Okay, do your own work. When you write that paper, don't take another classmate's information and turn it in to them, because I have somewhat of a photographic memory. So I'll say, this is the exact same thing I read a minute ago. What's going on? Okay, so make sure that you do your own work, because it could result in F on the assignment, F in the class, disciplinary action. It ain't worth it. Okay, so don't mess up and do any kind of cheating. Okay, homework, and I'm not sure why I said it's optional. Take that off of there and I'll fix that. Okay, I'll repost this by taking that off of there. It is not optional. Okay, you have to do the homework, and the homework is there to help you to learn the material better, and I'm going to go through that here in a couple of seconds. Okay, as I said, our class meets from 9:30 to 11:20. You can see the lecture schedule, and you can see, and I'll go ahead and put some information up for chapter. Actually, that chapter 3 is actually going to be a chapter 3-4. The chapter 3 information that I have listed there also includes information from chapter 4. And that first midterm will be chapters 1 through 4. It's February 6th. Okay, so it's about a month from now. That comes up pretty quick. And what is that, a Tuesday or a Thursday, February 6th? That's the easiest question I'm going to ask you the entire class, guys. Well, that's a Monday. So I guess I meant to say that it'll be February 7th. What are these, all Mondays? No. Okay, so I have to fix these here, these dates. That'll be February 7th, and I'll repost this. February 7th, which is a Tuesday. I will go ahead, if I'm looking at the right year here, right, 2023. It'll be February 7th, okay, and I'll fix these dates because obviously there's something off with these dates. Okay. 4 chapters, 30 multiple choice questions. We will take the exam. You'll come to class. You will log into Canvas and you will take the exam in Canvas at that time. Okay. Okay. And so on. Okay. The final exam is just these last 2 chapters. Last 2 chapters on the final exam. Note, guys, the time is different for that class. It's 9:15 to 11:15. So they give us a little more time. I guess maybe they're contemplating that the final would be more difficult. In our case, it won't be. So we'll have a little bit more time to take the final than we will the previous 2 midterms. Question. Okay, I'll make the changes to this today and repost this up and email this back out to the class to make some of the changes. Now, textbook, and this is where I may need to ask for some help on this. If you go to through the bookstore, through the De Anza bookstore, I guess they have this 1A, 1B, 1C, and it says W access. I think that means with access to the Cengage Now system that we'll use for the homework here. Okay, so when you acquire this, make sure that you're getting access to Cengage Now. Okay, so what that means is you will need to go and in Canvas. Did you close my Canvas? No, there it is. In Canvas, you see next to the syllabus, we have this boarding pass. You'll click on that, and I think I've already opened it. You'll click on it, you'll open it, okay? And this link is the link you have to follow in order to get the, whatever they're calling this, See Now version 2, Cengage Now version 2. This is what you will need to click in order to access the information that I've set up for you in this class, okay? So I believe that you can acquire the book directly by clicking here, or you can also acquire the book and the access to Cengage Now, which you get the access also by following this link and going through the Cengage directly. But then you could also acquire it by going through the bookstore option. Okay. And you see in the syllabus what has been set up in the bookstore here. And so you should go ahead and acquire this, and it's going to be useful for you not only for this class, but the other 2 in the series here at De Anza. So I don't know that I've seen this kind of a deal for a book that allows you to, cover 3 classes. That's pretty good. Okay, you can see the ISBN number. It's a Cengage book. The author is Warren, and you go in, and when you get that access code, if you buy it this way, then the way you register is you got to follow that link that I just showed you here. Make sure you follow that link when you register so that you can get into the material that I've set up for this class. So when you click on that, it'll take you to this login page here, maybe, because I've already opened something else. Maybe it won't show you the login. Okay, I think I'm already logged in, so it's not taking me to that login page. But you'll go to a login page here and you'll provide the information. Now, they give you a 2-week trial period, okay? And I'm suggesting that you take advantage of that 2-week trial period. So wait before you give them any money, essentially. Okay. So, you know, what you want to do is take advantage of that 2-week trial period. You know, maybe something will happen and you won't be, you know, wanting to take the course right now for some reason. And you can take advantage of that 2-week trial period. And I'm going to go a little bit further. I'm going to suggest that you not even use your 2-week trial period until we are done with, I'll signal you as to when, to be honest with you. I'm thinking about the time we're finishing up chapter 2 is really when you are informed enough about this class to make the decision as to whether or not you want to go ahead and, you know, acquire the book and continue on. And so, and rather than go ahead and get in there and, you know, kind of use up your 2-week trial period before you can really make the best decision, I would say let's wait until we're kind of getting towards the end of chapter 2. Then I'll tell you, okay, now go and, you know, follow this link, use up your, you know, 2-week trial period, etc. And I think you'll be in position to make a more informed decision. If you want to do it now, you're saying, hey, I'm going to do this. I know I'm going to go through with this and use this information. Fine, that's okay. You know, then you can go ahead and do it now. But I say you can wait if you want to, and then I'll tell you, hey, now would be the most efficient time to go ahead and register for the course, going through this process here. Once you get in, okay, for folks that are maybe going to go ahead and pull the trigger on that stuff now, what you'll see is, I think it'll take you into the my home page, and then you're going to go to my courses. Because you followed that link, you will see Financial Accounting 1, okay, that I've set up. You'll see this information, okay? And then you will go ahead and click on that link. And when you open that up, you will see the assignment tab here. And when you open up that assignment tab, homework set 1, and I'm going to preview as a student, start assignment now. Takes a minute. Okay, and you're going to have a minor coronary, because you're going to look and you're like, is this guy kidding? Really? Okay, let me look before you panic. What I have here are questions from starting with chapter 2 questions. Okay, when I signal you to start to go in to look at these questions will be relevant to what we're discussing at that time. And you look and there's 107 freaking questions, and you're like, well, he's nuts. I'm not doing this. Okay, this is what I did. I put as much as they'll let me of that material in there for you to practice with. I'm not going to sit here and say, oh, somebody, Tuan didn't do, only did 50 of 107. That's an F. That's not what I'm doing. I will look to see that you're getting in there, that you're doing some things. I may reach out to you and say, hey, I noticed you haven't done any homework. Are you okay? What's going on? But I'm really kind of treating you more as a, lieutenant than a private. Okay. I'm saying, hey, go and do what you need to do to make sure that you are comfortable with the material that's going to be on the exam. And this is extra batting practice really for you. And as I told you, those 100 points for homework, I'm going to be pretty much giving those to you as long as you have, kind of been participating in the class and stuff. And so have at it. I mean, you can do as much of this as you want. Okay. Now, if I look and I see that you're not doing anything, then I might start to have a little bit of a concern. Okay, so that's why I gave you so many, because I think it's a little bit silly to have you pay the money to acquire a textbook, and then I only give you pieces of what you purchased. So I try to give you as much as they will allow me to give you, and they cap me off at 100 and some questions that I'm able to give you. So for the homework sets, that's what I'll do. And I have one up there now, and I'll signal you, okay, now's the time to start looking at that. I don't dabble in and sometimes where class is kind of, we're not meeting in person. There's some folks that say, well, I'm going to go through and I'm going to do all the homework for the entire class in 1 week. That's not what I'm here for. Okay, I'm here to move you along. I take the weightlifting approach with this stuff, which is, hey, we look at it in class. It's a little confusing. We're trying to understand. We're asking questions. We're building up that muscle tissue. Then we go and for each class, what I will do for each chapter, I should say, not each class necessarily, but for each chapter, let me find my Canvas again. Notice that for each chapter, there is a practice midterm that goes along with that. Let me go ahead and open that up. Okay, now what the practice midterm does is it has questions that are relevant to the material in that chapter. And notice the answers are highlighted. And so what I do is I'll go through and I will, cover this with you so you can see how you will be tested on the material that we just covered. Okay, so we go through the slides, we ask questions, get a little bit comfortable with this. We look at the practice midterm. Okay, I see how I'm going to be tested on this. You go in, you mess around with that Cengage stuff, practice some of those questions. And then by the time you are actually on the exam, okay, I don't have it up here yet, but the exam will be very, very similar to the exam that you actually have in class. And in this section, you'll take it right here in Canvas. Okay, so you'll see that the exam will be here. You'll take it right here in Canvas, and it'll be very, very similar to what you saw on that practice exam that I just showed you. I guess I have to go back to the home page and click on that to show that to you again. It'll be very, very similar to these practice exams that we had. The other thing that we will have, okay, and I'm going to leave student view for a second. Excuse me, guys. The other thing that we will have are these practice midterms, and I haven't shown this material to you yet, but what we'll have is another practice midterm that will be more comprehensive in nature. So these practice midterms then, since, for example, our first midterm is going to be chapters 1 through 3, this practice midterm contains questions from all 3 of the chapters. So again, weightlifting approach, chapter 1, slides, practice midterm. I don't have anything in Cengage for you for chapter 1 right now. By chapter 2, okay, slides, chapter 2, we have an in-class example for chapter 2 that I'm going to walk you through. We have a practice midterm for chapter 2, chapter 3, slides, practice midterm. You look at some of that Cengage stuff, and then we have our exam, and this will contain information from those first 4 chapters, really combining chapters 3 and 4 together. Okay. Question.
Will the practice midterms be graded?
Will the practice midterms be what?
Graded.
No, nothing that's practice is graded. The only things that are graded really are your exams, obviously, and that guest speaker write-up. The homework questions, I'm not particularly interested in sitting there and, forcing people to do homework. It is there. I put it there for you to practice with. I ask you to acquire the textbook because you're going to need it in B and C as well. So it's a good investment. You might as well get that book. That first accounting book, and I'm looking at the shelf behind me. Okay, that very first accounting book is something you'll probably always keep. Okay, that one was mine. Okay. It's just something about that first time you learn stuff. It's always kind of nice to go back sometimes and look back as your first initial understanding of something. So I think it's a good investment to get it, and I'll kind of dabble around to see how you're doing with your homework and stuff, but I'm not going to get terribly caught up in how I'm awarding points for the homework. So get the book, get in there, mess around with Cengage. I'll give you some points for that. Give you the 100 points for that. Guest speaker write-up, do a decent job, answer the rubric questions that I'm going to be giving you on that, 100 points for that. What you really need to make sure you're ready to do is perform on the day of the exam. And these, to your question, these practice midterms are designed to get you ready for that. So no, they're not graded, but they're, I think, an important step towards getting you to where you're going to be successful on the exams. That's why I have them. Question. No?
I have a question.
Uh-huh.
Hi, good morning. On the practice exams, do you highlight the answer or are you going to review the practice?
Yeah, I do. I think this particular one, the more comprehensive practice midterm, I didn't put the answer on this particular file that I opened because sometimes students don't want to see the answer. So I put it there, one without the answers. If you ever want to see them without the answers, though, all you do is you unhighlight the answer. And I think that's actually a good way to prep for the exam itself, is take them. I provide the answer, but take the highlight out and then go ahead and work that question as though the answer wasn't given to you. That's an excellent way to prep for the midterms.
Thank you. And my second question was, do we follow like reading assignments in the textbook as you're teaching, or are we just basing this off what you're teaching us and taking the practice?
Okay, let me answer that question in a different way. Okay, I believe that by coming to the lecture, following the lectures, and seeing what's on those slides, seeing what I'm asking you about those practice midterms is all sufficient without ever reading a word of the textbook to get a good fundamental introduction to financial accounting and do well in this class, get an A in this class. Of course, turning into guest speaker as well. But I think through that, you can be successful in this class. Now, am I saying don't read the book? No, of course not. Reading is knowledge, right? So you can read the book as well, and probably should spend some time reading and gaining additional understanding. Maybe you'll read something in there and you'll say, well, geez, John didn't talk about this, but I would like to learn more about it. Let me ask a question of him about it. But the things that are going to be on the exam will come directly from what I've been talking about in class and what I'm showing you on these practice midterms. I'm not going to pull something out of left field from the book and say, well, it was in the, I always hated when, all of a sudden I had to take a class and the professor would put something on the test and I'd be like, what the hell is this? We never talked about this. And the professor would say, well, it was in the book, and anything that's in the book is, well, what the reason the person did that is they probably sat there the night before the exam was ready. They just quickly went and pulled a bunch of stuff out and didn't take the time to make sure that they had sufficiently covered that. I'm holding myself accountable to that by having these practice midterms. And I know that these practice midterms translate into the exam. And that's what I'm going to ask you. No surprises. I'm not looking to test your, and the questions are straightforward. That's the other thing. Sometimes, people like to put, and this is why I didn't want to teach at Berkeley anymore, because there was an expectation that you would put some question on the exam that was intentionally ambiguous. So you kind of test the intelligence of the student. I'm like, let them take a logic class for that. I'm here to teach them accounting. And if they learn accounting, then I'm happy. And they didn't know that's a touchdown, that's a goal. I'm not going to sit here and ask a bunch of logic questions in an accounting class. Now on the CPA exam, they do that, and part, not pure logic questions, but they put ambiguity and stuff in an accounting question. But in the CPA exam, that's fair game, because you're studying to get a license to be an auditor for the CPA exam. And so it's fair game to say, well, if you get incomplete, ambiguous information, can you still analyze the situation to get to the conclusion that you need to? So for CPA exam, I understand why the CPA exam does that. I'm not doing that in an introductory class. This class, I'm here to set you on the righteous path to get you to where you're understanding this stuff and you're not saying things like, well, I had revenue, so my cash increased. I am going to separate you from those kinds of notions, and I'm going to hammer that until you are comfortable with the notion of accrual accounting, how we build these financial statements using accrual accounting. And I believe that foundation will help you as you go forward with the B, the C, and wherever else in business you decide to go. And if you decide to go into accounting further, I'm of the opinion that most of my upper division students, my CPA students, their problem is not in understanding some of the nuances that we're having now. The problem, that we'll be studying when we go up the chain in these other classes, the problem is not that they don't understand the nuances I'm trying to teach them. The problem is that the fundamental is missing. Okay, it's sort of like any sport you play, right? What happens? You learn a bunch of bad habits, and then as you move up, the coach got to tell you to start all over again, and they start doing things like tying your feet together so you get the fundamentals correct. Well, we're going to deal with the fundamentals up front and starting here, okay? And we'll get those fundamentals down. And so I'm going to show you what I want you to know in terms of those fundamentals, and then I'm going to test you to see if you're taking in that material. Hopefully, that was a long answer to a straightforward question. Hopefully that was worth your time.
Yes, you answered my question. Thank you.
Question. You sure? Okay. So part of me is saying that you've heard enough for one day, or do you want to start going into chapter 1, or you want to wait till next time, till Thursday?
I wouldn't mind taking a look at chapter 1.
Okay. All right, let's go ahead and spend a little time with that, and then we'll well, I'll tell you what, I'm showing about 10:25. Let's take a 5-minute break, okay, and then we'll come in and we'll start jumping into chapter 1. Sure. Okay, we'll see you guys in a couple minutes. I will pause the recording during the breaks. Somebody please remind me to start the recording again. I have a bad habit of pausing it and then forgetting to resume it. So, okay, guys, we're gonna go ahead and jump back in, looking at the chapter 1 slides, which you can see up on the screen now. And before we do, any questions about, just chime in if you have a question about anything we've talked about in terms of the structure of the class, etc. Okay, good. Then if there are no questions there, we're going to go ahead and jump into the chapter 1 material. And you can see that we have discussion of the different forms of business. And it's worthwhile understanding something about how a business would be organized and what are some of the advantages, disadvantages, really is what we want to take away from this slide about the different forms of business, ranging from a sole proprietorship to a corporation. So let's start with sole proprietorship. Typically, as you can see, sole proprietorship is going to be a single owner. You usually just have one owner, tends to be a smaller business. For example, let's say a barbershop. Now, that doesn't mean that a barbershop couldn't be a corporation, but let's just use that as an example. And what happens? You go and you get, I think it's called a beautician's license, which allows you to be able to cut hair. Okay, let's just get haircuts. Let's say that's what your beautician license covers. And you say, well, I don't really want to work for somebody else. I'm just going to open my own business. So you find a nice salon and you go and you open up your beauty salon, your, you know, whatever you want to call that. And you start your business. Okay, well, you're a sole proprietorship. Okay, now what happens? The advantage of that kind of business, although I'm sure it was kind of hard to learn the beautician business, going to beauty college, whatever, but in terms of forming the business, it was fairly easy. You found a good location, you hung up your license, and you started attracting customers, and you maybe become a very successful beauty shop owner. So the start of that, barbershop owner, whatever, the start of that was pretty easy, right? Okay, other than what you had to learn to be able to do that business. The major disadvantage is this. Let's say you go and you buy a bunch of hair cutting equipment, you buy, those dryers, those hair dryers and whatnot. And since you're sole proprietorship, you put it all on your personal credit card. The credit card that you get is based on your personal credit, right? That's how you're able to acquire all this equipment. And let's say for whatever reason, you're not the luckiest business person in the world, and your business doesn't do well. And now you can't pay your bills. Well, what happens? In that situation, you would be personally liable for the debts that you incurred in that sole proprietorship and running that business. So what does that mean? That means that they're going to come and say, well, give us your house, give us your car, give us your kids. I don't know, whatever it is that they take from you when you can't pay a personal liability. So there is unlimited personal liability if you form your business under sole proprietorship. Not only would they take back the assets, the hair dryers and all that kind of stuff you use in the business, they could come after your personal items, your personal assets, your house, your cash, your personal cash, your bank account, etc., to satisfy those liabilities of that sole proprietorship. Unlimited liability. Question. Okay, now let's say you look at that and you say, well, I don't like that. That doesn't sound good. I want to avoid that personal liability. Let's go all the way over to the corporate form of business. If you establish your business as a corporation, now the corporation is seen as a separate legal entity. So what happens? Any liabilities that are incurred by the corporation itself would have to satisfy those liabilities. So they may take the personal, take the business assets, the hair dryers, that sort of thing. But your own personal assets, your home, your car are protected. They would not be able to move on those because you, even though you may be the person that formed the corporation, you may hold all the stock of the corporation, but you are seen as a separate legal entity from that corporation. And so you would have what? You would have limited liability. The liability is only those assets that are in control of the corporation, your personal assets would be protected. Okay, so that's an obvious and huge, right, advantage to the corporate form of business. Now, the disadvantage to the corporate form of business is that ease in formation. No. Now you have to register with the state. Corporations are what they call it, chartered with the state. Okay, so if you were going to be a California corporation, you would have to go to the California State Secretary and do certain requirements in order to register as a corporation, to become that separate legal entity. And that is somewhat involved. If you are going to be offering securities to the public, now you're going to have to follow certain Security Exchange Commission requirements. The SEC, which we'll talk about more in a little while here, is a federal agency that you will need to follow certain procedures with. You want to issue stock to the public. The Federal Trade Commission will start to come into your world if you're practicing out of the requirements of the Federal Trade Commission. Okay. You will have to file not only your personal tax return, but the corporation will also have to file a tax return because it is seen as a separate legal entity. So advantage, limited liability. Disadvantage, what? Increased regulation at the state and federal level. Okay, so that's why somebody may say, well, I don't want to go through all that. I'll be a sole proprietorship and I'll risk that unlimited liability. Now, let's talk about this middle column here, partnership. Okay, and there's not a huge difference between sole proprietorship and partnership. Okay, the difference is instead of having one owner in a partnership, right, you're probably going to have more than one owner. For example, go back to the barbershop, beauty salon, whatever. And let's say I have the beauty chairs there where I'm cutting the hair and all that, but I have some extra space over here in the space that I'm using for my beauty shop. And I'm thinking, gee, I should do something with that, right? I'm trying to be efficient business person here. And you say, I know, I'm going to have some nail stations put up there. I don't know if you've ever seen, if you've been in, the place where when I used to take my dad to get his haircut. My dad passed a couple years ago, and I used to take him to get his haircut. And there's nothing worse than a guy like me, okay, having to go to take his 90-year-old dad to get a haircut. I'm like, what happened? I was getting a haircut and I'm not getting a haircut. Okay. So we'd go and we'd also have him get a pedicure at that same time, right? So let's say I'm a person that cuts hair. Get back to my example. I'm a person that cuts hair. But I look over and I see these I think to myself, I can imagine pedicure stations up there, but I don't know how to do that. So what do? I bring in a partner, okay, and that partner then would do the pedicure stuff, manicure stuff, the nail salon part of our business, right? So we're expanding our business. We're attracting more business because maybe somebody that, wanted a manicure sees what a nice job I do with cutting hair and decides, oh, okay, I'm going to dump my current beautician and I'm going to start coming here. I get it all done in one swoop, whatever, right? So your way of expanding your business. Now, the question is, in a partnership, who's liable for what? That's why in a partnership, it is important that there be a partnership agreement. And the partnership agreement will call out who is specifically liable for what. And typically the person that would be the nail person, right, would be responsible for any debts they incur. And I would be responsible for any debts that I incur. But it would be important to make sure that there is a partnership agreement that calls out those liabilities. But still, unlimited in terms of we're not seeing as separate legal entities that can, kind of hide behind a corporate curtain to protect ourselves. Now, what tends to happen is, lenders, creditors are not dumb, okay, for lack of, they're not, I don't know if I should say dumb, they're not naive, okay. they know what's going on. You form as a corporation, they may make you sign something that says that you'll still be personally liable. So even though you may set up the corporation, often they will lend you the credit unless you go ahead and give, some idea that they can, protect their lending or whatever to you through some sort of agreement that goes outside of the corporate form. Question?
I did have a question about the corporation aspect.
Yeah, sure.
So is that what an LLC would, like, I'm guessing, fall under?
Limited liability corporation, limited liability partnerships, you hear that as well, tend to be more towards the corporate form of business. Okay, what tends to happen with a limited liability corporation is there tends to be, a main holding company. And then there are investors that come in under that, and those or partners that come in under that, and their liability, it tends to be limited to whatever they invested in that LLC or that LLP.
Yeah, I was gonna ask, how does debt, how does debt affect you then in that? Because I know some people, they'll get an LLC, then open up like a business credit card and use it under the LLC, but how does that affect you if it was like liable or had debt?
Yeah, typically it's limited to whatever the LLC shell is. Okay, and so again, you can protect your own personal assets under that sort of form of business. I think LLC, the reason someone would do that is instead of a different type of corporation, is the formation aspects are a little easier than if you were trying to be a C corporation, which would have more stringent requirements. But in terms of the protections that we're talking about here, they are more consistent with the what I described for the corporation.
Okay, thank you.
And same thing with an LLP, just a little bit of a different form is how they set that up. Okay, good. These things that we're talking about here, I should probably, give a disclaimer there. I'm not an attorney. Okay, so these sort of discussions, when you take your business law class, would obviously be much more fleshed out. So, your business law instructor might be sitting there going, oh, what's this guy talking about? Because there's more nuance to it. I don't want to get in too far to where, I would be the guy that after I know what form of business you have, what are your financial reporting requirements? So, okay, good. Now we come over and we take a look, and we look at the users of the accounting data. Okay, now in this class, we are really going to be focusing on external users. Okay, that's really who we focus on here. And when we look at external users, those are individuals that are obviously outside of the company and will be using that information to make various business decisions. Okay, and the primary users, and this is recognized by the profession, by the accounting profession, the primary users, the people we think about the most outside the company, when we're preparing financial reports for use outside the company, the primary users, the main people we're thinking about are investors and creditors. Investors and creditors. Those are the primary external users. Now look, there are other people outside of the company that might want to use the financial statements. For example, maybe customers of a company may be interested in their financial reports. Let's say you're going to have, you're going to put solar on your home. And I don't know, I always get the feeling that these solar companies might come and put this stuff on my house and then go out of business. And then I'm stuck with this thing on the house and no way to fix it if something goes wrong, whatever. And so I might want to look at their financial reports to see, are they doing well enough? Because I'm going to be signing some sort of maintenance agreement with them, and I want to make sure they're going to be around long enough to be able to exercise this maintenance agreement over the next 10 years or whatever it is, right? And so customers are external, okay, but they are not primary users. So even though there may be information in the external reports that are useful to people other than investors and creditors, when we prepare financial reports, the industry has accepted, the accounting industry has accepted that the main people we're interested in, the primary people we're interested in, are investors and creditors. Now, what would you rather be? Would you rather be an investor or a creditor? That's a question.
Creditor?
Creditor, okay. Why would you rather be a creditor? There's no right answer, by the way. I'm just asking you, what would you rather be and why?
I think I'd want to be an investor.
You'd want to be an investor? Okay, we got one vote for creditor, one vote for investor. Why investor?
If the company makes a profit, then I would, in theory, also profit.
Okay,
I'll-
good. So you're saying that as an investor, as the company potentially grows, the value of my investment grows as well, right? Okay, good. Whereas with a creditor, I'm going to do what? I'm going to lend money to somebody, a company, let's say, and then I'm going to get that money back. And my growth potential is really just whatever interest I charge them for that lending, but I'm going to get that principal back, right? Okay, all right, good. Now, couple things. Is there a guarantee that you'll get the money back if you're a creditor? Well, there's legal guarantee. They guarantee legally, but if they don't have the resources to pay you back, then you could lose on that situation. That's why they show them chasing this guy. But the expectation is what? You will get back your initial investment, okay? The initial amount that you had lent to them plus interest. If you're an investor and the company goes, which by the way, most, new businesses, that's the direction they tend to go in. If the company goes under, will I get my money back? Company goes under, they become worthless. Will I get my money back? Answer is what? No.
No.
I lose that investment, right? Okay. So in this particular case, everybody's cheering because I guess the value of this company is going up. What I kind of laugh about this thing is they don't sit here and, give you a timeline. So this is the value on the y-axis. Then on the x-axis, there should be what? Time. And so what happens if you lived your whole life in that period? That's not the greatest thing in the world either, right? So it really also depends on what. That's why I said there's no right answer. What is your objective? If you've got time to wait for this growth, then okay, maybe you are leaning more towards an investor. If you're saying, no, I need to get some return on this right away, maybe you lean more towards a creditor. That's why they'll tell you as you get older, like me, you should have what? You should have some more in your retirement portfolio, whatever, some fixed income securities like bonds, because bonds are going to what? Pay off a certain amount of interest periodically, et cetera. So that's why I said there's no right answer. It really depends on the objectives of the individual that's making the decision between being an investor and a creditor. Okay. Again, from an accounting standpoint, we're saying, well, these are the people that we are preparing our financial reports for. Okay. And the industry has accepted that. Okay. Now, when I say, quickly on internal users are obviously those inside the company. I don't know what the class number here is at De Anza, and I'm not sure when they allow you to take managerial accounting, or is it part of C? I'm not sure. If there's a separate class for managerial, or maybe in C they get into managerial. We will not touch managerial accounting in this class at all. It's all going to be about, for the first, I think 9 chapters, right? We cover here at the beginning. It's going to be all about the external users and the information that we provide them. Internal users are obviously those inside the company, and they can use them for these various decisions. I don't like this, they automatically put the employees in an adversarial relationship with the company. We're on strike. Okay, that may be, but maybe we have some sort of stock option plans and we're interested in the value of the stock going up, because then that is going to make my option more valuable to me. And so in a positive way, I could have interest as an employee in the financial result of the company. Okay, but these would be considered internal users. That tends to be more of a managerial accounting discussion. Okay. Okay, good.
I have a question.
Yeah, sure.
I have a question about the investors
Okay.
or the external. What's the difference between the two signatures?
What's the
Or the
difference?
investors?
I'm sorry, say it again. I'm sorry.
What's the difference between the two investors?
You mean the two investors that are shown on this slide?
Right.
Let's see. In the case of this General Electric, they're worried about income. In the situation, so they're in that situation, they're evaluating the company. They're doing what they call a longitudinal analysis. They are doing what is often called a horizontal analysis. So they're looking at how things have changed over time. Okay. In the investor, graphic here on the right, here they're doing more what we would probably call a vertical analysis. So they may be comparing the company to itself, or they're comparing the company to another company to decide from a comparability standpoint which company looks like a better investment for their purposes. So the investor themselves are the same people potentially on either panel of this investor part of the slide. But the analysis that those, let's say, same investors would be doing are graphically illustrated differently between the two slides. Does that make sense? The two.
Yeah.
The slide. Yeah.
Okay. Thank you.
Yeah. Okay, but it'd probably be the same people. It's the investing public is what the highfalutin phrase that we use for that. Okay. Okay, good. Now you come over and you take a look at this slide and what happens when those investors and creditors are making those decisions, right? We've just seen from the good question that we had that, hey, we may want to be able to compare company to company, right? Okay, so what happens? We need to know that all companies prepare their financial statements using the same requirements to prepare them. Okay, so what happened? In 1934, 1933, 1934, almost 100 years ago, right? They pass securities laws, federal statutes that create the Security Exchange Commission. Now, when you think about 1933, 1934, can you think of a major historical event that happened just prior to that? Bet you didn't know this was going to get into history.
Was it the Great Depression?
Talk about something bad that happened, huh?
The Great Depression?
The crash of the stock market in 1929, and then that sort of is the signal point that we're going to enter into, frankly, a very barbaric period in our history called the Great Depression. Okay, now what happens? 1929, 1930, again, almost 100 years ago. Is there anyone still alive today that was alive during that time? maybe, I hear, well, the oldest living person is 100 and something years old, whatever, right? But even that person, let's say someone that lived to be 102, okay? That person, when the Depression hit, was like this. More formula? I mean, that person had no notion of what was going on around them. Their parents, who had to come up with the, food for the kid, they were very aware of it. I mean, my dad passed here a couple of years ago, one day short of his 90th birthday. His recollection of the Depression was, well, when we were kids, we only got one present. If I was a dog, if I had a dog, I had to feed the dog with the food scrap. There's no such thing as dog food back then. Okay, so he's sitting there, as a kid's perspective, imagine what his parents were going through. So it must have been what? If nobody is still alive who remembers it, yet everyone talks about, oh, the Great Depression, it must be what? It must have been pretty bad, right? Like I said, barbaric. Okay, so what happens? Part of what caused that stock market crash was the fact that individuals would put information in their financial reports that they thought would be the best way to attract investors. And whether or not that information was reliable, whether it had representational faithfulness was the second consideration. The first consideration was, will it help me attract investors? And then when it came to pass, that some of the things that they were putting down were not coming to fruition. They had put things down that weren't necessarily true in their financial reports. When that came to light, everybody jumps out of the stock market, creates a crash, and this sort of ushers in the Great Depression. So what happens? You start having the New Deal under President Roosevelt, that kind of stuff. And one of the things they do to avoid the problem of unreliable financial reporting is they create the Security Exchange Commission. And they say, SEC, it's written in the legislation, you have the legal authority to set accounting standards. You have that legal authority. You will be the entity that will set accounting standards. And all companies will have to follow those standards. And then we'll have an auditor come in and look at those financial statements and give an assurance that those financial statements are, reliable for investment and credit decisions, at least reasonable assurance that they that they are reliable for investment and credit decisions. Okay. So the SEC says, okay, well, that's a pretty big job. It probably makes sense for the profession to set the accounting standards, and we'll monitor that. We'll look over their shoulder and make sure that they are doing a good job in setting the accounting standards. So they turned to the accounting profession. The American Institute of Certified Public Accountants was the organization that they first turned to and said, you will write the standards and we'll make sure that your standards are meeting our objectives of making sure that there's reliable information to the investing public to make these investment and credit decisions. So the AICPA did that for a couple of years. They did it from 1939 until 1973. In 1973, they turned that over to a new organization, not-for-profit organization that was created in 1973 called the Financial Accounting Standards Board, FASB. FASB is a private entity. It's not part of the government. It's a private entity. It's a 7-member board, and that 7-member board decides what companies should be putting in their financial reports. Okay, and that's been the case since 1973, with the SEC looking over the shoulder of the FASB, making sure that the FASB is doing the things that they think that they should do. Because the Security Exchange Commission has the legal authority to set accounting standards, but they have delegated that to the profession, the 7-member Financial Accounting Standards Board, the FASB. Why 7-member board? Why 7? Why not 8? Why not 8?
What's the question again?
Why 7? Why not 8?
For the board members?
Yeah, for the FASB. Why do you have 7 members and not 8? Very
So that
specific.
if they come to a vote, it's not like a tie or draw or anything?
Okay, it's gotta be a simple majority, okay? 7-member board, simple majority, okay? Just gotta pass a new standard by 1 vote. There was a short period of time where they said it had to be a super majority, which means you have to pass by more than 1 vote, 2 or more. But they got rid of that. They started out as a simple, then for a while, there was some politics going on that said that it had to be a super majority. They were trying to dampen and slow down the FASB. Then some other bad stuff happened, so they went back to a simple. And so it is currently, and I think it'll probably stay there, a simple majority, 4-3. Although these days, all bets are off on how the whole system works. So the ways crazy these things are now. But I think it'll stay 4-3 now. Okay, but it's a 4-3, and these are individuals that have extensive experience. You have an investor sort of seat on the board. You have a preparer, the people that prepare the statement seat on the board. You have academicians, okay, which are people that educate, right? Etc. You have different sort of perspectives that allow the FASB to consider the different constituents, the different people that need to be considered when you are looking at a standard. From the standpoint of the FASB, though, their primary concern are external users, and the primary users are who? Investors and creditors. So when the FASB votes on a new standard, that's who they are supposed to be thinking about, investors and creditors. And again, the SEC sits here looking over the FASB shoulder to make sure that they're satisfied that they are considering the needs of the investing public. Okay. Okay, good. So when you look at this slide here, you can see that we mentioned the FASB, we mentioned the Security Exchange Commission. FASB sets the standards, even though SEC has the legal authority to do so. They have delegated that to the Financial Accounting Standards Board. When they issue a standard, they call that standard Generally Accepted Accounting Principles. And when a company prepares their financial statements, they need to make sure that they have prepared them in accordance with GAAP, these Generally Accepted Accounting Principles. And when auditors come in and audit those statements, they will look to see that the companies follow those Generally Accepted Accounting Principles. So now, when I look at those statements, I know that the information is reliable. I know it is comparable from company A to company B because the companies all have to follow the same standards. So I can make that sort of, vertical analysis, et cetera. If I'm doing a horizontal analysis, I know that the company just isn't throwing information in there that makes that line look better. They should be following the standards and coming up with something that has neutrality as they prepare the financial reports. Now, when you look at this slide here, you can see that we also have International Accounting Standards Board, the IASB. IASB is a 15-member board, again, odd number, so they can vote on different standards. And they issue International Financial Reporting Standards, often abbreviated IFRS. Okay, now, the United States does not use IFRS. United States uses US GAAP promulgated by the FASB. Okay, now there was a time back in 2000 time frame when everybody was saying, oh, the United States is going to go over to IFRS. It's not, they used to say, it's not a question of if, but when the United States will go to IFRS. And I used to sit there and I would think to myself, you understand that this is a democracy and there isn't the ability for one entity, the Security Exchange Commission, to dictate anything. Okay, we have what? SEC is in the executive branch, where the president is. The what? Congress is in the legislative branch, and they balance each other. And so what happened? When it started to look like maybe the SEC was going to expect that the United States would go over to IFRS, get rid of the FASB, follow the International Accounting Standards Board standards, companies went to Congress and lobbied. And they said things like, if you make us go to IFRS, the terrorists have won. I don't know. They say whatever they need to get what they want. Okay. The main thing that they were concerned about, that if they had to all of a sudden throw the switch and go over to IFRS, that the cost of converting their accounting systems from US GAAP under the FASB to international standards under the IASB, that was going to be too costly. Also, there were some IASB rules that they didn't like. For example, under international financial reporting standards, an entity is not allowed to use certain inventory methods that allow their income for tax purposes to be lower. And companies want to be able to use that inventory system, and we'll study that later in the class. They want to use that inventory system to make their income look lower for tax purposes because they pay less tax. And if IFRS came in and the inventory method that I'm talking about is called last in, first out is eliminated, companies would have to pay higher tax, and companies don't like to pay tax. Now, they couldn't go to Congress and lobby it that way. We don't want to pay more tax, right? And so they came up with other reasons, or sovereign accounting standards and that sort of stuff, to give Congress things to stand on so that they could create enough political pressure on the SEC for the SEC to say, okay, we're going to stick with US GAAP. So what happened was the FASB and the International Accounting Standards Board got together and they developed a dual conceptual framework. Okay, a conceptual framework is explaining how we get to the conclusions that we do in our standards. The idea being that if we're both working off the same set of standards, then we will have convergent, not same set of standards, but same conceptual framework. Then we'll have conversion of the standards over time. Okay, so that's the approach that they've taken, is convergence. But I'm here to tell you, there will always be differences between US GAAP and the International Accounting Standards promulgated, International Financial Reporting Standards promulgated by the IASB. There will always be differences. Okay, in this class, we're going to be right here. This is what we're studying. Okay, we'll really be here. There will be times where I will call out some things, just maybe from a curiosity standpoint, that are different in IFRS versus US GAAP, but we're going to be focusing on US GAAP standards promulgated by the FASB with the SEC looking over their shoulder. Now, this other panel says, well, there's 100 countries that use IFRS. No, okay, is that impressive? What do you think? You think China uses IFRS, or do they use China GAAP, their own sovereign accounting standard?
Their own.
They use their own. They use China GAAP. Now, that can get confusing because if you look at the official position of the Ministry of Finance in China, it says, well, we use IFRS. But I had an opportunity to travel to China to talk about accounting a little bit. And so I went and I asked, so you're using IFRS now? And they say, no. They whisper to you, no, we're not using IFRS, we're using China GAAP. So what they did was they cherry picked parts of IFRS that they like, other parts of IFRS that they don't like, they didn't adopt it. So you look at this and what US uses US GAAP, China uses China GAAP. So that's the 1-2 economies in the United States, in the world. So, does IFRS really have the impact influence that you might think it would? Typically what happens is emerging economies tend to like to adopt IFRS. If the country has an emerging economy, they like to use IFRS because what? Because now they can attract capital more readily from all over the world, because it's easier for me to compare a company in one country to a company in another country if they're both using the same standards, which is really the objective of IFRS. But the US kind of bailed out of that. And so if you're sitting there and you're trying to make a decision, should I buy stock in United Airlines, a US company, versus Emirates Airlines, which is part of the UAE, United Arab Emirates? UAE uses what? Uses IFRS. US company, United Airlines, okay, Emirates is going to use IFRS. The US company, United, is going to use US GAAP. It's more difficult to compare. Now, I'm here to tell you that if you flew on the two airlines, you would decide to buy the Emirates stock because it's a much nicer airline than United, in my opinion, when you actually fly on it. But in terms of the financial reports, you know, you would have a little bit of trouble comparing those two. Okay, but we're going to focus on FASB. Okay, and you can see that it is a political process as the FASB goes through and you know, considers these different constituents. Okay, so we're going to stop there. I think we're about to the end of the class time here, guys. We will pick up Thursday here where we left off. At this point in time, I would suggest that you take a look at the syllabus, see if you have questions there. If you want to go ahead and inquire the Cengage package now, you can do that. I still suggest, though, that you take advantage of the 2-week trial period. And I would also suggest that you even, you know, so don't give them any money yet. But I would also suggest that you even wait on that so that that 2-week trial period will go into maybe 3 weeks, 4 weeks into the class. And that'll give you time to absorb some of this information to see if you think you really want to pull the trigger on it. Question? Okay, guys, pleasure meeting you. We will see you on Thursday.
Thank you.
Bye.
Thank
Bye-bye, guys.
you.
Thank you.
I'll be posting the recording up here fairly quickly, hopefully. Okay,
Thank you.
bye.